Good morning, everyone. We will start the morning call. US markets were up 1% on Friday. Asian markets are up around 1% this morning, while the GIFT Nifty is flattish. Chinese stocks are up between 1.5 to 3%, extending last week's gains on increasing signs of Beijing being determined to shore up growth with measures supporting weaker parts of the economy. Also, if we see the Chinese manufacturing PMI data that came out over the weekend, it has contracted for a fourth straight month in July with a figure of 49.3. Anything less than 50 in PMI is considered as a decline. So there is definitely a need for stimulus from the government. Another important thing globally is the crude oil, where West Texas Intermediate is holding above $80 per barrel after a run-up of 5 weekly gains that lifted the prices. If you look at US crude benchmark, it has rallied 14% in just the month of July, which is one of the highest monthly increases in last 18 odd months. So that is kind of uh, will put pressure on governments globally who are trying to cap the interest rate increases, because this will lead to higher inflation going forward if the trend continues. Also, record high demand across geographies except for China. Most other geographies are growing well, and on the other hand, Saudi has undertaken supply cuts. So that has led to the crude oil industry in deficit. I will now invite the technical team to take the call forward.
Thank you, Jehan. A very good morning, all of you. So, as Jehan had also mentioned that taking the cues from the global market, we're expecting a flattish to sideways opening in today's session, and we're expecting a sideways move too in today's Nifty session. In If we check at the Friday session of Nifty, Nifty has formed a doji-like formation and has taken a good support of its 20-day moving average, which was around 19,580, and the 577, and the low was around 19,565, 570. So we think it's going to take a support, and we are expecting a slight bounce back from this level in the Nifty. Today the immediate intraday resistance is placed at 19,740. Once that is broken, it can take Nifty toward 19,850 to 19,940. Whereas the immediate support again lies at 19,570, which is the 20-day moving average, which I just mentioned. If that is broken, then 19,500 will act as a very strong support zone for Nifty. Moving on to Bank Nifty has shown a negative move more as compared to Nifty in Friday's session. Again, it has also taken a support from its 20-day moving average, which was around 45,450 levels. For today, the immediate resistance for Bank Nifty is currently placed at 46,000. Once Bank closes above 46,000 levels, then only it can inch towards 46,240 to 46,500 levels in the coming sessions. Whereas the immediate support for Bank Nifty will be same as 45,400, followed by 45,150. Moving on to Nifty Financial Services, it had shown some profit booking as well. It has closed about 20,400 levels. The immediate resistance for this index is placed at 20,540, followed by 20,650. Whereas the support for this index is placed at 20,300, followed by 20,180. It is going to be a very stock specific market, so we request everyone to trade with strict stop losses. There are two stocks which are looking good right now. So one is Dabur. The FMCG space is performing well. You can take a buy call for a target of 604 in the coming session with a strict stop loss of 569. Also, HAL is looking good at the charts. It has given a good breakout above 1300 levels for a target of 4040, and the stop loss will be 3830. That's all from my side. I request Amit to take the call forward.
Yeah, thank you, Ayush. Good morning, everyone. So on the derivatives front, as we are seeing that the market seems to be in the range of 19,500 to 19,900 level. But on the OI front, we are seeing that at 19,800 level, major quarter positions are added on, while around that strike almost around 11 million positions of call writers are there. So till the time Nifty is not giving a move or stability above 19,800 level, till that point of time we might witness some profit booking from the upper levels towards 19,800 to 850 zone. Well, on the downside, 19,500 is an important support zone where we are seeing that almost 10 million positions of put writer positions are there. So it will act as an important support below 19,500 level. Panic and the cautious movement will be witnessed in the market, while we are continuously seeing that India VIX is trading between the range of 10 to 12 from last 2 to 3 months. So once if Nifty goes below 19,500 level, we expect that the volatility will increase, due to which the India VIX will also go about 13.5 level. So keep watch on this mind, hold a long position with the supportive level, while another data point seems to be positive because on the stock specific front and the index specific front from the FMCG reality all seems to be positive. So we expect hold a long position with the supportive levels. On the stock specific front, we expect GAIL and BEL these two counter looks positive for today's trading session. So that's it from the derivative front. Thank you.
Good morning. DG Talk Transfer Systems has received an order from an overseas customer for supply components of an OE program worth 180 crores. Production is expected to begin from the last quarter of this year. This is positive. Anup Engineering result has improved. Revenue grew 140% year on year. Q1 being a weak quarter, from March quarter it declined 13%. But EBITDA margins came at 22% against March quarter 21%, last year 18%. And even profits were as high as the March quarter at around 19 crores compared to last year just 5 crores. So result has improved and we are positive. Mahindra and Mahindra Financial Services result is below expectation, mainly due to two counts. Net interest margin declined sharply from 7.4% to 6.8%. And credit cost also came higher at 2.4%, which is the highest in last 4 quarters. So we are neutral in the near term. DCB Bank result is in line with expectation. NIM declined by 35 basis points to 3.8%, which is higher decline than what other banks have seen. Credit cost although remained low at just 40 basis points. NPS saw a seasonal uptick for quarter one. Loan growth was at around 19% year on year. Overall, we remain positive from long-term point of view. Equitas Small Finance Bank result is above expectation due to lower credit cost at 0.8% against expectation of 1.5%. Advances growth remains strong at 36% year on year and 6% sequential. The slippage ratio has now settled at pre-COVID levels of less than 3%, which is a good sign. Bank has delivered ROA of 2% for the third consecutive quarter, and we think that gradual re-rating in this bank will continue. Piramal Enterprises result is okay operationally, although asset quality has improved. Outstanding loan book remained flat overall, as shift continues to happen from wholesale to retail side. Retail now forms 55% of total book against 35% a year back. And gross NPAs have seen a good decline from 3.8 to 2.8%. Even stage 2 has come down from 8.7 to 5.2%. Stock has a good value for someone who is willing to hold for the longer term. It is trading at 0.8 times price to book. With every passing year, the share of retail book will continue to increase, and eventually that should translate in the longer term to decent ROAs. So we remain positive. Five-star business finance result has improved mainly on the back of acceleration in loan growth, which came at 43% year on year and 10% sequentially. This is one of the highest growth that we have seen among all financials. Asset quality further improved for 1+ days past due. It came at 15% against 16.5% in March quarter. So despite a seasonally weak quarter, the asset quality has improved, which is a good sign. We had recommended 5-star couple of months back in our monthly pick, and we believe that based on the current result and upgrades that will follow, even at this price, the stock remains a good buy. SBI Cards result is marginally below expectation. Spreads continue to shrink as cost of fund increased 40 basis points, while yields increased by just 20 basis points. Loan growth remained at 30% year-on-year, 6% sequentially. However, because of compression in NIMs and lower fee income, total revenue increased by just 18% year-on-year and 2% sequentially. Credit cost came a bit higher than expectation at 7.7%. And so short term, we are neutral on the stock, but long term positive. IDFC First Bank result is marginally above expectation, as the credit cost came slightly lower than estimates at 1.1%. Asset quality continued to show good improvement. Net NPA has fallen to 0.7% versus 0.9% in March. Advances growth remains strong at 29% year-on-year and 7% sequentially. We remain positive on IDFC First. Star Health and Allied Insurance result is below expectation. Although gross written premium grew 20% year-on-year, it was slightly below estimates. And combined ratio at 97.8% is also higher than expectation of 96.2%. And retail health market share was stable at 32%. From long-term point of view, we remain positive on Star Health. Thank you.
Good morning. Sonata Software has posted below expectation numbers for the quarter, with IT services dollar revenue coming in at 77.3 million versus expectation of 82 million. Stock is trading at a PE of 25.7 times FY24 EPS. Nazara Technologies has posted marginally below expectation numbers for the quarter, majorly on the revenue front. Stock is trading at a PE of 64 times FY24 EPS. Thank you.
Yeah, good morning. JK Lakshmi reported declining numbers. However, the company had its con call on Friday, wherein management has maintained its guidance of cement volume to grow at 19% in FY24 on a consolidated level. EBITDA per ton is likely to reach to rupees 1,000 per ton in next 12 to 18 months on account of improving premium product mix, improvement in supply chain, and cost savings on power and fuel front. Company's fuel mix is 43% pet coke, wherein the prices of pet coke has declined substantially. So good improvement is likely to be seen in the next quarter and in the coming quarters as well. So the outlook remains positive on a long-term perspective. Sagar Cement reported declining numbers. The management has the result was declining mainly due to its annual shutdown for its Matampalli's clinker production. However, the management has guided its sales volume to be 6.4 million ton with an EBITDA of 4,000 crores in FY24. So with this current run rate, EBITDA per ton is likely to be over 700 per ton in next 3 quarters as compared to EBITDA per ton of 258 in Q1. So we expect better operating efficiency and further cost reduction to bode well for the company. So the outlook is positive for Sagar Cements. Godavari Power had reported a good set of numbers. Iron ore pellet production was down by 21% sequentially and year-on-year, mainly due to annual shutdown. However, pellet realization stood at 10,200 as compared to 9,800 in the previous quarter, which helped in higher EBITDA. Management has launched a new pellet grade with 66% Fe content, which commands a higher realization as compared to 65% Fe. The management has guided its pellet production to be 2.6 million ton, with realizations to be in the range of 10,000 to 10,500 per ton in Q2 and 10,500 to 11,000 per ton for FY24. So the outlook is positive on a long-term perspective. Thank you.
Good morning. Marico Limited posted results, and the results were in line with the expectations. The revenue degrew by 3.2% on a YOY basis at rupees 2,477 crore. If we look at the performance, domestic volume growth was at 3% YOY, which was lower than management expectations. This was largely due to decline in the prices of domestic portfolio, specifically on the vegetable oil prices, where there was a sharp decline, and it led to significant trade destocking. Also, the management took multiple price cuts in Saffola edible oil portfolio. In addition to that, it has observed the channel inventory adjustments in its core portfolio. Besides that, there was a currency challenges in international markets, which led to subdued performance in the overall revenue. In terms of operating performance, there was a sharp decline in input prices, which improved the gross margins at 50%, which grew by 494 basis points on a YY basis, and that resulted into EBITDA margin improvement by 253 basis points on a YY basis. That is 23.2%. The management is looking at the medium term growth, where the parachute rigid segment is expected to grow by 5 to 7%, and the VAHO it will achieve the double-digit value growth. Also, the food business during the quarter had grew by 24% on a YOY basis, where it has maintained the market share and the penetration. It is expected to achieve rupees 850 crore revenue in FY24. Also, Saffola edible oil is expected to grow by high single digit volume growth, and international business is expected to grow by double digit on a CC terms. So on the base of guidance, 20% plus EBITDA margin is expected with the positive domestic business growth in the second half of FY24 and double-digit growth in international business. We are positive on the Marico. We had recommended this stock on a monthly picks in the last year, and we are still positive on the stock at these levels. The Rossari Biotech Limited result is broadly in line with expectations. The top line performance registered 5.5% degrowth due to its plant shutdown of 2 weeks led to lower sales in the month of April. The shutdown was mainly on account of its transformation to new enterprise resource planning solution implementation across its 6 group companies. The EBITDA margin reported at 14.1% versus the expectation of 13.5%. The stock is trading at PE of 33 times to FY24 EPS, and further insights will be shared post today's con call. Lakshmi Organic Industries result was broadly in line with expectations. The revenue degrew by 3% on a YY basis at rupees 734 crore. The EBITDA margin reported at 10.5% versus the expectation of 9.8%. The stock is trading at a PE of 26.7 times to FY24 EPS, and the con call is scheduled today. Supreme Petrochem Limited result is declining. The revenue reported at 1,225 crore, which degrew by 17.5% on a YY basis. There was a domestic sales volume was fell by 4% on a YY basis due to low offtake in appliance manufacturers. However, including exports sales volume, the total sales volume of manufactured products increased by 8.7% on a YY basis. The prices of styrene monomer, main raw material for the company's products, fell over 20% during the quarter. That resulted in destocking, which impacted the volumes and the margin. The margin reported at 7.4% for the quarter. The stock is trading at a PE of 14.9 times to FY24 EPS. Thank you.
Commodities team can take over.
Yes, thank you, Jehan. Good morning, everyone. In today's session, we are expecting some range-bound movement in gold and silver. All in all, prices are expected to trade within the range from 59,400 to 59,900 in the October contract. One can initiate a buy around 59,600 and maintain a strict stop loss of 59,400. On upside again, 59, 850, 900 is the level where one can initiate a sell and maintain a stop loss of 60,150. So there could be some range bound movement. So trading within this range is recommended. Also, silver for trading purpose, one can initiate a buy if prices are sustaining above 74,000 and maintain a strict stop loss of 73,600. And on upside again, 74 500 is the level we are expecting some profit taking. So it is advisable to take profit around that range. In crude oil, 65.50 is the area we are looking to buy, and one can maintain a stop loss of 64.70. On upside again, 66.50, 66.70 is the area we are looking to take profits. And as long as it is holding above 65.20, we expect prices to remain positive. Natural gas also one can initiate a buy, though it is trading in a range bound from 210 to 228, but prices can pull back from these levels. So buying with a stop loss of 210 is recommended, and on upside 228, 230 is the target we are looking for. In copper also, one can initiate a buy around 741 and maintain a stop loss of 737. And if prices are closing above 744, then we expect further price rise. Buying on dips is recommended in copper. Zinc also we are expecting prices to test 223, 224. So buying around 220.50 is recommended and maintain a stop loss of 219. Aluminum also one can initiate a buy around 199.50, 199 looks positive. One can maintain a stop loss of 197.50, and on upside we are looking for 202, 203 levels. So buying on dips is also recommended in aluminum. That's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session in USD and we are expecting some side momentum. Until and unless market are sustaining above 82.02 levels, the market will trade with a positive bias. So one can initiate a long positions in the range of 82.06 to 82.24 levels with a strict stop loss of 82.19 levels for the target of 82.36 and 82.43 levels. And on the higher side, one can initiate a short positions around 82.44 to 82.46 levels. The stop loss of 82.54 for the target of 82.36 and 82.30 levels. In Euro INR, one can initiate a long positions around 90.60 to 90.55 levels with a stop loss of 90.29 for the target of 90.96 and 91.10 levels. Thank you.